Welcome back to another episode of the Full Subjects Podcast. Today, summer is over. Labor Day long weekend is gone, and we are
I don't
back
know.
into fall. Summer's not over. Sorry.
Don't tell people that. Some people like to hold on right till the end of.
Everybody's just clinging on to that good weather for a couple more days.
Exactly.
Unfortunately, all the smoke and forest fires and stuff that were all right. Yeah, I guess it would be forest fires, all the stuff that's going on in the Coquihalla right now. But anyway, enough about that. Awful stuff, but not what we're talking about today on today's episode. So summer's done. We're going to break down the August stats package, some really interesting stuff that we want to kind of hash out and talk about. And then we're going to be heading into fall market here, which is typically I would say the second busiest market of the year. I think it's fair to say we see an uptick in the spring, things slow down in the summer, and then we kind of get our second wave here in the fall. So just want to, if you're thinking of selling, thinking about making a move, even thinking about getting into the market, we're going to not only talk about the August stats, but also what to expect as we head into September, October, and even a bit of November as well. So as always, this podcast is for informational purposes only. It does not constitute any legal, tax, financial, investment, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. Didn't even have the disclaimer open as a note. Nailed that. Don't worry about it. Let's start with the Cole's notes. Cole, take it away.
You did nail that. Well done. Let's do a quick update, market/economic update here. Mainly going to focus on interest rates. I mean, that's typically kind of what we talk about. So next big announcement is September 17th. So we're about 2 weeks away as of yesterday, given that we're recording on a Thursday this week. So we've talked about this before, but what kind of things are going to determine whether or not the Bank of Canada is going to cut rates? A few things. Number one, how's the economy doing? So recently, Austin and I were chatting about this. We got GDP values, I guess, back for quarter two. Came in lower than expected, which isn't good. It means the economy as a whole is doing not as well as anticipated. So take that with what you will. Or we saw a sharp decline in exports, which, I mean, no shock there. I mean, that's a big thing that's going to happen when there's additional costs to sending exports, especially to the US with tariffs. So not really a big shock there. And then we also saw the other big one was less business equipment spending. Still, businesses aren't spending as much on equipment. And again, I think that really has to do with, hey, if I'm ordering something from the US and it's going to cost me X amount more to order it right now, maybe I'll hold off on that. Or maybe businesses aren't growing as much because the economy is not in a great position, or it's projected to not be. So not a big surprise that GDP is down, but overall it's not a good sign in terms of how the economy is looking. A couple other things that we like to look at in order to determine what's going to happen with rates. Unemployment data. So that's actually coming out tomorrow. Unfortunately, we just missed that by a day. And then CPI, which is inflation, that comes out the day before the rate announcement. So those two pieces of data are going to be huge when it comes to determining whether or not we actually see a drop. Right now, it's sitting at about a 60% chance, at least when I last looked. So assuming that unemployment data comes back and let's say it's not very strong, let's say inflation is kind of where it has been or it's getting worse, don't be surprised if we see a rate cut in September. I think we'll see it. The way that things are trending, I think that we'll see probably at least one more before the end of the year. Some economists are expecting more than one, but I think one is a fairly safe bet. We've got, I believe, 3 more announcements, if I'm not mistaken, Austin. Mm-hmm. And then the other thing that kind of factors into all this is the U.S. And we talked about that a little bit with tariffs, but the U.S. Fed is kind of our equivalent to the Bank of Canada. The U.S. is equivalent to Bank of Canada. And they, funny enough, actually meet on September 17th as well. So they're projected to likely make a cut. It's over 80%. I think it was actually close to 90% chance that they'll cut. Now, that doesn't mean because the U.S. cuts, we're going to cut. I'm curious, actually, because they're on the same day, if they're going to make the announcement at the same time. I imagine they will at roughly the same time, given that I believe the Bank of Canada usually releases it by like 7 a.m. Pacific Standard Time. So that's pretty early. I can't imagine we're going to get a US announcement much earlier than that, but maybe we will. Ultimately, I don't think that's going to drive the decision because the decision's already made before the 17th. I think they'll look at those two pieces of information, unemployment data and inflation, and then based on that and based on the GDP that we talked about, they may or may not make a rate cut. So good news if they do make a rate cut. If you have a variable rate mortgage, if you have a home equity line of credit, that's great for you. Or if you have another line of credit that's maybe also tied to the Bank of Canada's overnight rate or their policy rate, then yeah, maybe you'll save a few bucks. But ultimately, economy is not doing great, which I think is how most people probably understand it right now. And yeah, things are going to have to change, I think, for the economy to start getting a little bit better here. But that's all I got for today, Austin.
I think just to recap, exports are down. People are nervous about spending money, especially when it comes to businesses, things like that. Mm-hmm. You're seeing that anecdotally. You're hearing that from people. There's a lack of decision making in the real estate market. People are nervous to make decisions, and again, a lot of that often centers around people feeling nervous about spending money, taking on more debt, taking on more leverage, let's say, whether that's purchasing or upsizing, things like that. We've got 3 rate announcements left until the end of the year. So September 17th, October 29th, and then December 10th is the last one. October 29th has the monetary policy report as well. Cole had touched on that during. And then the 2026 schedule has already been posted, pretty similar schedule with some rough date changes, but we won't break down 2026. Let's worry about finishing off 2025. It's widely expected that there'll probably be one more rate announcement before the end of the year. Cole said about a 60% chance of September. We'll see. Again, depends on how things go over the next couple of weeks. But yeah, that's kind of just our Cole's Note recap. Let's talk about the real estate board and some real estate board stats.
All right, let's jump into it, Austin. So new thing we like to do is we like to mention the headline because I think that can sometimes pave the way for what the stats are going to tell us. So the headline for the Fraser Valley stats package for August is declining prices and high inventory strengthen buyer's market heading into the fall. So, I mean, pretty simple. Lots of inventory, prices are coming down, and it's continuing to be a buyer's market. And I think that's no shock. So yeah, I don't take anything from that headline that's any different than what we already know. Is that safe to say, Austin?
Yeah, I mean, I think that's exactly what we're feeling. Let's hop into some of the individual stats because I've got some hot takes.
Love it. All right, let's jump into it. All right, so listings, we always start with listings. So new listings dropped almost 20% in August, which that's quite significant when you're talking about month over month. So that one kind of jumped out to me right away. And then active listings did drop a little bit. They dropped from about 11K down to about 10,400 in August. So it's 2% lower than July. Makes sense. I mean, there's less listings coming on, so less new listings, and obviously stuff does sell. So it's not a surprise that went down. But what do you think about the new listings part, Austin? Do you think people are a little scared now? Is it a time of the year thing? Like, what do you think?
I think August is typically just a little bit slower. Not a lot of people are in town. A lot of people take vacations, go to town, camping, all that kind of stuff. So doesn't necessarily, surprise me to see that new listings dropped by about 19%. I had similar conversations with people. I was meeting with people in August and they're like, cool. Yeah. So we can hit the first week or the second week of September. So, I have a couple media shoots lined up over the next couple of weeks, a couple listings that'll be hitting the market over the first couple of weeks of September. So I wouldn't be surprised to recap, you saw roughly 2% lower active listings. I wouldn't be surprised if that picks up a little bit. And then new listings dropping because again, a lot of those people are probably just punting for September for listing. Yeah.
Yeah, hot take. I wouldn't be surprised if we see active
more
listings.
More listings.
in the next month. And also wouldn't be surprised if we see new listings increase month over month for September. But I don't think that's a hot take. That's obviously a little bit of sarcasm for you guys. So transactions, unsurprisingly, those went down as well. Down just over 900 transactions in August, which was about a 20% decrease. So almost a similar decrease to new listings. Not that they're tied together necessarily, but just kind of tying those things together from a numbers perspective.
Yeah, so it was a 22% decrease from July and then 13% lower compared to August 2024.
Yeah.
And about 36% below the 10-year average. So yeah, it was a slow August. We felt it for sure.
Yeah, I think that's a really good way to put it. Not a lot happened in August. Not a lot of people put their places on the market. Not a lot of people were buying. It was a slow August. People, like Austin said, they're enjoying August. They're enjoying summer, which arguably has come to an end now. We'll debate that later. But yeah, no, it's and honestly, the other thing it did is it pushed sales to active listings ratio down 2 to 9%. That's the first single digit we've seen since we've done the podcast, at least. I know that for sure. So that's quite low. Just as a reminder, about 12 to 20% is considered a balanced market. And then anything over 20% would be considered a seller's market. So we're definitely in a buyer's market, and we have been for a number of months now, but we're deeper into a buyer's market, if you will, in terms of if we're using that piece of data to determine that, then I would say we're deeper into a buyer's market, but that can obviously shift pretty quickly. And yeah, we'll see what happens in September with that. But yeah, no surprise there, Austin. I don't know if you want to speak on that.
Yeah, I mean, ton of listings kicking around. Not as many sales, not as many people looking in August. So yeah, it doesn't really surprise me that number was a little bit lower. Again, just not as many people, eating up that inventory that's there. So yeah, pretty straightforward there.
Yeah, exactly. I think that all makes sense. So pricing, obviously this was in the headline. So we saw almost a 1% decrease overall. And that makes sense because detached, we saw a 1% decrease month over month. Townhomes, we saw 0.9, and then apartments, we saw 1. So pretty much 1% decrease across the board month over month. That's not insignificant. 1% is for just a month is not a small number. Are we surprised by that? I wouldn't be, given that July was slow. People were probably trying to get stuff to move, and obviously August was already a bit of a tough time to try to sell anyways. So that doesn't surprise me. And then just really quickly across the board, we're about 6% down on detached homes from last year at this time, about 4.5% for townhomes, and about another 6% for condos. So prices are down. Are they going to continue to come down? That remains to be seen. But Austin, what do you want to add to pricing right now?
Yeah, I think when I see these three numbers, detached being down, just under 6% doesn't really surprise me because of the market that we're in. Typically we see the entry-level inventory, like the condos, start to get moving. That drives the townhomes because those people are maybe upsizing. And then once the townhomes start to go, then we see that detached product go. So when I see the detached as well as the apartments be the biggest adjustment, I think on the detached side, it's probably because things are more expensive. The townhomes maybe aren't moving as much, so people can't jump to that next inventory. And I think that the apartments being down so much, honestly, I just think that because there's just so much condo inventory out there. So many listings. Like I was doing a CMA on one area. Don't want to be specific, but there was 11 months of inventory. That is a lot. So, basically what that means, not to go like word for word definition, but just general idea. Basically, at the rate that things are selling at, it would take 11 months to go through all of the inventory. That is almost a year. And that also assumes that no new listings are hitting the market. Probably are. As well as, so ton of inventory out there. Some of the conversations I'm having with people too is like, oh, do I do this now or do I wait? And it's like, I don't know if things are necessarily going to be better if you wait. So it's just something to think about when you're going through your decision-making process for sure.
Yeah, that's interesting. I've never I've never really heard that before, like what you just said, but that's an interesting way to look at things is, hey, there's this many places right now available. And based on the way that things are trending, it's going to take this amount of time for all of that to be sold. So, and I think
Yeah.
that number it's a bit scary when you hear that, right? It's like, hey, it could take me a year. It's
Hmm.
not what everybody wants to hear, right? So,
Yeah.
but I think
And
that's just the reality.
well, and then with that too, something to think about. And again, we can't give any agency advice, and everybody's situation is going to be different. So again, got to be very careful with how we word this. But like, if you're looking at different areas where there's more months of inventory or less months of inventory or more total listings, some people might say, oh, well, if I go buy in this area, I can get a better deal, and get a cheaper price or accept or whatever, right? Maybe they get gravitated towards that area because they can save a little bit of money. However, what also happens with that is you probably aren't going to see an upward pressure on you actually, gaining value and equity until all of that inventory is eaten up, and then you start to see an upward pressure on prices. So, you might save a little bit in your pocket now, but you might not start actually making money on your investment for a while, depending on where you buy. So, it's really, really, really important if you are on the buying side right now and on the selling side. Look at individual areas, see which areas are maybe doing better than others, and have that conversation. Because as much as, again, a home or a house is a place to live, for a lot of people, it is their biggest financial asset. So you want to be really mindful about how you're navigating that.
Yeah, well said. Absolutely. All right, so really quick, last stat here: days on market. Nothing really changed here, to be honest. Detached a little over 5 weeks. Townhomes are taking about 5 weeks, and then apartments are actually taking the longest now, 6 weeks, surprisingly. So, yeah, I don't know. I think things are kind of trending down still, if you will. Like prices have still come down. It's still taking some time. We're not seeing a lot of sales in August. I could see this shifting slightly in September. But I think it's going to take a little bit more than a month to start to see an actual shift if we do see one. Now, the tough part is, and Austin, I'll get you to speak to this more than myself, is we have fall market, as you talked about at the top of the show here, but we're also going to hit December. And December, as we know, is typically not a great month for sales. So we might see a bit of push, and then we might see things kind of retract a little bit, and then we might see, who knows, in the new year what we'll see. But I don't know. I kind of want to hear your take on where you expect things to go in terms of how you feel, and just maybe from more of a general sense too.
Yeah, I mean, if I had to give my summary of how, or my hot take or prediction of how I think the rest of the year is going to go, I still think that we'll probably stay in a buyer's market, or maybe like a low end of a balanced market. Like, could I see things maybe getting to like 12%, maybe 13% in some areas when it comes to like sales to active listing ratio? Yeah, I could, because I think we're going to get a little bit of a bump in activity in the fall market. I think that that's dual sided though. So what I mean by that is, as much as I think that there's some people that are maybe waiting until the fall to maybe purchase their first place or make a move, et cetera, et cetera, et cetera. Like, there is some buyers on the sidelines right now that are interested in potentially doing something. Is that enough to significantly, eat into the inventory that we have? Not sure yet. I guess we'll see. But we're also going to see some people that are doing two transactions. So what I mean by that is, yeah, more listings will be coming, and assuming that those people sell, they will also be buying something. But all things considered, that's like a net neutral when it comes to supply and demand, right? You're selling something, you're buying something else. We need to see more people that are just doing one transaction, and that one transaction being the buy, or people take their listings down and rent them out, and rental prices and all that stuff is, we can do another 3 episodes on that. But I think that's what it's going to take. I think we'll see a bit of a bump. Typically, historically, we see like a pretty solid 6 weeks from like, let's say early to mid September to like the end of October. We see a pretty steady, pretty steady run of activity. But then after that, I think things slow down pretty significantly until the end of the year with some exceptions. That's also talking generally. There's always pockets that are active than others. It's really important to go through the stats package, and whether that's the Fraser Valley stats package or there's another one. What's it called? Not great.
It's called Not Great.
Snap Stats. There we go. They do a great stats package as well. I'm going to edit out that other part. Snap Stats is great. That'll break down individual areas. But yeah, that's what I think.
Awesome. Yeah, no, I think that's great. I think that makes perfect sense in my mind as well. I'm curious because, as you mentioned, like there's definitely some buyers on the sideline and there's probably some sellers on the sideline too. And if we're looking at sales to active listing ratio, if we start seeing more listings come on and we don't start seeing more sales, or if they kind of balance out, it's hard to move the needle on that. So obviously, again, that's a percentage that's used to determine if we're in a balanced market or not. Does that mean anything in terms of if we are? No, it doesn't necessarily, but it gives us some way to quantify it. So yeah, I think we'll have to wait and see. And obviously we'll bring you guys the stats next month. We'll see how things went. But yeah, I don't know. Hopefully, I guess what I'm hoping for is maybe we'll see a rate cut this coming next 2 weeks. And that may help a little bit too in terms of sentiment. But I would say right now, if I had to finish off from like a rates perspective, you're pretty similar right now with fixed versus variable. Like there's not a major difference, if any, depending on the lender or the bank you go with. Like it's going to be pretty much the same. So is that a good thing? I think so. I think it gives people options without having to make a choice based strictly on the rate. They can actually make somewhat of an educated decision because they're not kind of emotionally driven by the rate being a little bit better. But yeah, anyways, that's all I got for today. Austin, anything else before we wrap it up?
Yes, I want to take a few minutes here because this has been a hot topic in the mortgage and real estate world. I feel like every broker I know is talking about a rate promo that's going on right now.
Okay.
Let's take 3 minutes. Let's talk about what you have seen. Where it makes sense for people, where it doesn't. Just take 3 minutes. Let's talk about it because I think this is very interesting. I've been having conversations with some of my clients about it, saying, hey, look, if you plan on being in your place, it might be good to reach out to your mortgage broker because this is going on. So yeah, just take it away. Let's take a couple minutes and just talk about,
Sure.
how it might make sense for some people.
Absolutely. Yeah. We won't get into the specifics of who the lender is or anything like that. Yeah, what I will say is there's a pretty good opportunity right now for some people. Where that opportunity lies is in two places. It lies in refinancing your mortgage. So that means taking on additional funds with this new lender. Essentially what you're doing is you're taking your existing mortgage, you're moving it over to another lender, and at the same time you're adding extra amount. You're borrowing an extra amount. Now you might borrow that amount for renovations. You might borrow that amount because you have some other debt that you want to pay off. Like there's multiple things that you can do with that money, but assuming you have the available equity, you have the opportunity to do that. The other option is you can just straight up switch your mortgage. Now, this one, you need to be careful because it has to make sense. Because whenever you break your mortgage, there's going to be a penalty, which means there's going to be a cost. Not to mention, there's going to be a cost of moving your mortgage because there's a legal cost. Typically, there's other costs associated with moving your mortgage, which I won't get into the details of. We actually talked about this, Austin, in a different episode. So that's something that we could actually highlight. But sorry, got a little bit off topic there. Ultimately, this can make sense if the savings are going to be better than the cost. That's the way I look at it. And that's what I present to people. I say, hey, look, I looked at your mortgage based on X, Y, and Z. It's going to cost you this much to move it. And based on A, B, and C, this is how much you're going to save. And if those numbers, if the savings can outweigh the cost, that can be an opportunity for somebody. Now, by no means does it mean they should do it, but it just means that there is an opportunity there for them. But they also have to understand that they have to go through the process of changing their mortgage as well as some of the costs that they're going to have to pay to do so. So, anything else you wanted to touch on with that? I know that's more my area, but if there's anything else you're looking for.
No, I think it's a good conversation. Obviously, with that, you want to make sure that you plan on staying in your place and your plans
For sure.
are locked in with that. I guess let's say, because the last thing you want to do probably is like, yeah, let's take this rate promo. Lock in for another 3 years. And oh, by the way, we want to move in a year and a half. So like might not make sense for everybody.
Right.
But hey, if it can put, even if it's $100 a month in your pocket, a little bit of savings, if the math makes sense, then, maybe it's worth a conversation and the scenario makes sense. But again, that's why you talk to people like Cole. Thank you guys for joining us for another episode. We appreciate it, and we'll see you next week.